Hey everybody, Real Estate Ninja here. Let's turn off the fan. Just got off the slopes. I went skiing this morning. Got my bulletproof coffee. We're gonna talk about the Nasdaq stock market and a correction that may be happening. And I love to talk about cycles. I love to talk about cycles when it comes to real estate. You know, I did really well selling my real estate ahead of time in 2006, but I didn't take full advantage of it in 2010. And I sold my stocks and went into bonds right before the dot-com crash. I still, lost my butt on a couple of positions, but this is an amazing story how to zero hedge. It's entitled Dot-Com History Rhymes for Nasdaq as Fed Cuts Looms. And you'll notice in the story, I'm gonna show you a couple of charts right before everything went really bad during the dot-com bust. The money returned from the Nasdaq went negative. And the same thing happened in 2007. Now, we're in a moment where PE ratios or price to earnings ratios are out of whack. We haven't seen these kind of ratios in some stocks since the dot-com bubble. And most people have no concept of these cycles and they are just destined to be a part of it, destined to be broke, I guess, because they don't want to open their eyes. And I want to open as many people's eyes as possible. And so we use cycles. There's nothing new under the sun. It says in the Bible, I believe that is still true today. And everything repeats. So let's do this. It says right here, this is out of zero hedge. History shows that stocks are well poised to gain before the Federal Reserve starts slashing rates. But daunting valuations for technology names suggest that the S&P 500 may outperform the Nasdaq in the first half of the year. Both the S&P 500 and the Nasdaq 100 baskets have traditionally rallied in this phase between when the end of a Fed tightening cycle and the start of policy loosening, except on one occasion, the 2000 to 2001 cycle, when the markets were caught deep in the bubble. And here's a chart real quick. I'm going to show you. See if I can expand it real quick. There we go. And this is the Nasdaq gains before Fed cuts, but this time may echo 2001. You'll notice in 2001, Nasdaq gains, it's circled right there, went into negative territory, right? Now, I've taught this before on many things in a couple of courses I've built and on a bunch of videos where the Fed always starts dropping rates before a recession is announced. And it's always about a 1 quarter before. And what most people don't realize is the reason why they start aggressively dropping rates 1 quarter before a recession is because a recession typically or historically was 2 or more sequential down negatives in GDP, right? So the first one comes in, the Fed already sees the writing on the wall. They have all the data before them. They know everything when it comes to markets, right? And so what they do is they start dropping rates. And they say, hey, you know what? We're going to go ahead and start dropping rates and get the economy coming back again, stimulating. But it's always too late. It's always too late because most people have blinders on, they don't see it. So when quarter 2 comes, the Fed is already aggressively dropping rates. That is when you want to start buying up homes and getting ready for amazing stock deals. Because as everything turns negative, the news cycle turns negative, what happens is then everybody gets negative. And they start to sell their stocks. They start to sell homes. Inventory on homes picks up, you see. And most of the public were unaware and they become aware way too late and they start selling along with everybody. Again, economics always just comes down to emotion, human emotion. All right, so let's go back to the story here. So it says here, in the run-up to the rate cuts of 2001, when the Fed slashed its benchmark rate by a whopping 475 basis points, the S&P slid more than 12%, while the Nasdaq slumped 42%, as buyers' remorse started to grip the markets after the dot-com mania had run its course. Let me share something. You know, these ETFs, exchange traded funds, which are pretty much vaporware. Most people don't know that, but they're just derivative after derivative after derivative. The amount of money that's pushed into ETFs over the last 10 years and all these YouTubers that have pumped them up, they're going to get a rude awakening, I believe, one of these days in the next couple of years as the market does turn negative because it has to. And the reason why I say the market has to run negative is because eventually people will start figuring out, wait a minute, companies are making less money. There's so many zombie companies out there that are simply making money by borrowing more money. They're not selling goods or services anymore. They pump their stocks up by laying people off. And so all the stock traders get excited. They're like, oh, that means you're gonna make more money. You have to realize the reason why they're laying people off is because they're selling less goods and services. Our economy is turning negative. This is going to happen. And then the crowds are going to push out. And you're going to see losses that are going to be fantastic. And I say fantastic because there's at some point I'm going to be shorting the markets. I'm not doing it right now. I've been wrong a couple times on the cycle, honestly. But I didn't put a whole lot into the short position, thank heavens. One time I will admit it did pinch though. But the Nasdaq right now is already losing, as you're going to see in a second. And so then the S&P will follow. Now think about this. The Nasdaq slumped 42% in 2001, 2002. Can you imagine having most of your money? And a lot of people did. The Nasdaq was the S&P of today, back then. Everybody was buying these funds that were invested in .coms and all stuff. They got wiped out. And right now you've got a bunch of young YouTubers that are all hip and nothing can go wrong. And everybody's in the S&P 500, S&P 500, S&P 500. And they always like to tell you, look, on a long-term trend, if you go back to this date, you're always going to win. You know what those YouTubers, and they're going to find out the hard way too. When the water goes out, the tide goes out, we're going to see who's swimming naked. And I'm not talking just naked short selling. That's an actual term. I'm talking about like who was in leverage. There are a lot of people that are dangerously close to over leveraging themselves. So think about what it would be like if you lost 42% of everything you put in. A lot of people put everything in. There are some people that put 90% of their net worth in an S&P ETF. I know some of these people. It's absolutely crazy. Now, the story goes on to say, while valuations of technology stocks may not be as daunting as they were then, the Nasdaq is trading far from levels that many investors would consider reasonable. At current levels, the Nasdaq 100 offers an earnings yield that is the lowest in relation to the Fed funds rate since the days before the .com bubble burst. You can't make this stuff up. I'm going to show you another chart. In fact, the 3.25% prospective earnings yield on stocks is tantamount to the basket trading as though the Fed's fund rate had already fallen to those levels, even assuming that they can trade with the benchmark rate. Check this out. Look at this chart right here. This is the Nasdaq 100. And this is a chart from 2003 to 2023, so a 20-year chart. And look at what happened in 2005 to 2007, right here. See how it dipped way down? Had lots of losses, right? Look at where we are now. It's impressive when you start looking at things like this because you go, you know, history repeats itself. And I believe that 2024 is that year where we see these stocks turn. I really do believe that. The fair value of the Nasdaq is 12,877 when the technology basket is viewed as a long duration bond. Under conditions of stable long-term interest rates and steady dividend growth rates, the valuation can't turn on a dime. That fair value suggests that technology stocks are now trading at a rich premium of more than 30%. That excess may be thought of as the price that the markets are assigning to the growth potential of artificial intelligence. You know, and it's really sad. AI is going to take a lot of jobs away. As a matter of fact, put down below what jobs you think will be replaced with AI. And I'm going to give you one in just a second. So many people in the trades are saying, AI won't replace me. I'm going to tell you one in just a second, okay? So start putting down here what jobs you think are going to be replaced by AI. And that's going to turn to a stock market correction or a slight depression because we'll have such a high in the next coming years, a high unemployment rate. Now it says, in comparison, the S&P 500 is trading more or less where it is indicated fair. While fully valued at current levels, the froth, given a fair value of 4,632, is within acceptable limits, especially against a backdrop where a Fed pivot may stoke earnings growth. I want to remind you, and the author of this, that the Fed has never lowered rates when economics are good, when things are good in the economy. It's when things are bad. So if the Fed pivots, I don't see a massive move into stocks unless there is a big push on the government's part to push stimulus, and stimulus that can go right through people's hands into the stock market, because people are going to be chasing yield, because stimulus will lead to a massive gold price increase, more than likely a Bitcoin price increase, and it will lead to rampant speculation, because people are going to be searching for yield as inflation gets worse, because it's going to cause inflation to get worse. It says the Nasdaq 100 has rallied about 3% so far this year ahead of expected rate cuts, but I think that's froth. Coming on top of stunning gains of almost 55% last year, technology stocks have priced in all the good news out there and more, making them vulnerable to a bigger correction than brick and mortar stocks. You know, I was watching, and this has to do with the AI. People are putting their burger flippers, things like that. I watched a robot the other day tape and mud a room all by itself. It had a trough. This thing was incredible. Had 4 wheels turning, and it would line up and laser scan the room. It would go right up, and it would tape right ahead of a mud, and it was mudding about a 14-inch plane, and it would go all the way up and down this thing. It was the most incredible thing to watch, and I'm like, holy cow, plasterers are screwed. You know, there are so many people in trades that think that, you know, there's going to be a day where electricians will be able to come up and hook up to one of the outlets. And through the frequency of the electric pulses through the house, you'll be able to find where there are problems at. And it'll show on a 3D platform, probably pop up just right in front of you, the house in front of you, because it'll scan all of the electrical waves in the walls. It'll pop up a 3D image and point to what's wrong and how to fix it. People need to prepare now for less jobs in the future. I do believe that small mom and pops are going to crush it, because for an intern time, for a decade, those are going to be needed so much. But being a part of massive conglomerates and working for those companies, you're going to be in trouble when they start cutting fat. And I think that we could revolutionize this economy by bringing back small mom and pop businesses. I just the other day told my wife that I want to start another small mom and pop business in a town that we're maybe going to be moving to generate revenue but social and economic activity, because I truly do believe in this. I've just got to find the time to do it, of course, but I believe in this so much. I hope that you are not over leveraged in one thing. I've been burned before, and I hope that you're well diversified. Thank you so much for watching. Thank you to everybody that hit the subscribe button on this channel, because this is my backup channel, and I do all kinds of news on this one as well every day. The Real Estate Ninja is out.